Hey, Brian Vaughn here of the Vaughn McHenry team with Fairway Home Mortgage, and I want to tell you what happened with interest rates over the last couple of months, and maybe more importantly, kind of where we are right now and where things seem to be headed, especially with the government shutdown being the name of the game at this exact moment. So to start with, let's take a look backwards. So right now I'm looking over here. This is where my screen is. That shows the pricing of mortgage-backed securities. And if you remember, higher on this graph means that the price of mortgage-backed securities has gone up, which means that interest rates have come down. So higher on this graph, the lower mortgage rates are, and the opposite is also true. So if we go back here and you look at August 1st, right, we had this huge improvement. And then pretty steadily through the month of August, through to the beginning first half of September, we had pretty steady improvements in mortgage rates coming from that like high 6%, 7% range on average to where they are right now, which is like mid to mid high 6% range. So we've seen some really meaningful improvements over the last couple of months. Those improvements have almost entirely been because of the unemployment data, the jobs reports that have come out over the last couple of months, which have been very, very weak. Specifically, the Bureau of Labor Statistics jobs report, which I'll talk about a little bit more here in a moment. But that showed that like not only were the most recent months weak, but there were revisions to the previous months to show that, oh, they were actually not as strong as those original reports indicated. So those were the major events, these big green bars. Those were the days when those reports came out. And because it was so weak, suggesting a weaker economy, which is deflationary, that's always good for mortgage rates. So that's why we saw this improvement. Then what happened is we hit the Fed meeting. So we had this ramp up to the Fed meeting. We had the Fed meeting right here in the middle of September. And the Fed meeting itself, they cut their basis points, the federal funds rate by 25 basis points, which is exactly what the market was expecting. So that had basically no impact on the market. But then there were comments made by Jerome Powell at the end of their meeting during the press conference that they always have that suggested that the Fed was just being a little bit more cautious than markets wanted to hear. They were saying that inflation was still kind of sticky. They were still uncertain about some things and not sure that they would commit to the rate cuts through the end of the year that people were thinking they might, which is why you started to see this rebound on rates and they crept back up just a little bit through to the end of the month. Then move forward into the beginning of October. Well, here we are, government shutdown. What does that mean? It means a couple of things. Number one, there's a whole bunch of people, federal employees who aren't working right now. So any data that pulls their employment numbers is not going to be necessarily indicative of what is actually going on because when the government reopens again, presumably most or all of those people are going to go back to work, although we don't 100% know that because Donald Trump is saying that he's using this shutdown as an excuse to eliminate federal worker positions. And if that plays out on any kind of scale, then that's of course going to impact jobs numbers as well. But the other thing that it impacts is government services are shut down, including the Bureau of Labor Statistics. So today that I'm filming this, which is Friday, October 3rd, we're supposed to get the BLS jobs report for the month of September, but we're not getting it because that department is shut down. And we're not going to get it until the government opens back up. So we don't know exactly what numbers we are looking at here. In its place, we get the ADP jobs report. And let me turn to ChatGPT to help me explain the difference between those two. The BLS jobs report is an official report through the US Department of Labor that involves a household survey. That's how they get most of their numbers. Versus the ADP jobs report, which is from payroll processing, but it's only for private sector, whereas the BLS also includes government employees. So it's more limited and it's just on payroll, but it does give you kind of a sense of where things are at. So we got the ADP jobs report on October 1st, just a couple of days ago, and that showed incredible weakness, really, really weak numbers. There were job losses, actually, according to that report, when the market was expecting some modest job gains. So that's why you see, again, this slight improvement in interest rates, which is where we find ourselves today. Looking forward, I think what we can expect is to kind of be hovering in this territory for the foreseeable future until the government opens up again and we see exactly what those BLS jobs numbers are and what the impact of any mass layoffs will have on the jobs numbers overall. Those two things could have a really big impact on investors' feelings about where the economy is headed. Could also have a really big impact on what the Fed decides they are going to do with the remaining meetings, of which they have two through the rest of this year, and how deep that they are going to go on their rate cuts for the federal funds rate. So that's where things are at right now. Hope it's helpful. Thank you.